Bajaj Finance's customer additions remain strong, but the pace of AUM growth moderates to its lowest in 10 years. Brokerages believe loan growth could moderate going ahead as well. Stock slips 7% now.
RBL Bank rallies on strong business update. The loan growth comes in at a 3-year high. The CASA at all-time high. Brokerage house Morgan Stanley, however, remains underweight on the stock.
Marico reports low single-digit revenue growth and mid-single-digit volume growth in its India business. The company also expects moderate growth in operating profit.
The RBI lifts the curbs on recoveries via outsourcing for Mahindra & Mahindra Finance. The stock opens higher and holds onto those gains.
SJV and buzzing after the cabinet clears the way for a 2,600 crore rupee hydropower plant in Himachal Pradesh.
A very good morning. Welcome to Chartbusters. I'm Nashil D'Souza, and joining me as always is Mangalam Malu. Well, Mangalam, overnight the cues were fairly okay. The US markets recovered from the day's low, ended higher. We opened up in the green, but we were unable to sustain at higher levels. The good news, though, is that we've at least defended the 18,000 odd mark, in the first hour of trade. And my sense is, given the kind of short position that we have on the index, the 17,950 to around the 18,000 odd level, holding on to that level could brace us for a bit of a bounce. We won't go running away to the races, but maybe, in fact, a bit of a bounce could not be ruled out. That's provided we hold on to those levels.
Yes, Nigel, the Nifty bank is underperforming, and if there has to be a bounce, that's where, one has to see whether the bounce comes in from that index or not. For now, we do have the mid-cap health looking fairly okay. Even Stevens out there with regards to the advanced decline. The sector that's doing well is the FMCG pack. We have a big move coming in on Britannia, HUL, Tata Consumer. We'll keep talking about that during the show, but we do have Sachidanand Uttekar with us. Sachi, absolutely flat right now. We're holding on at around that 18,050 mark. This was to be a crucial support zone. Where do we go from here?
Good morning, Mangalam. Good morning, Nigel. Clearly, the major trend for the indices remain weak. But if you look at today's data itself, just because of the crude effect, that 18,000 mark would be significant. So we are not expecting, a very strong bounce back. But in case if that particular bounce back happens, we may see the rally getting capped somewhere around 18,150 itself. So we are not expecting any major move to unfold on the higher side. On the lower side, I think 17,980 would be the trigger. In case if that particular level is breached, then probably we may see a quick move towards its 20-week exponential moving average, which is placed around 17,860 kind of. But right now, the kind of data that we are seeing, we are expecting the pain to be steady at around 18,000, 18,050 marks. So probably this is the level wherein we may see Nifty, ending today's expiry. But when it comes to Bank Nifty, a clear resistance has been established at 43,000, and probably we may see a swing towards 42,700, and that particular support may also be breached. So the selling pressure could be from the banking space or the financial space itself. That's why we are still recommending, shorting Bank Nifty with a stop loss at around 43,150. We are expecting a swing towards 42,560 eventually in the second half of the day. So right now, I think it's better to create some short positions in Bank Nifty, but Nifty, I think it could be steady for the day.
Okay, all right, Sajid. What about individual stocks? What's your view on that?
Nigel, I think if you look at the strength pockets, I think Sun Pharma has been doing well despite of the market volatility. The stock has sustained well above its short-term averages. If you look at the last couple of days, we have seen a good consistent move on a closing basis above that 1,000, 1,010 mark. If you look at today's opening, we have seen an open low formation on the futures, and a positive crossover in its 5 and 20 exponential moving averages is compelling that we may see a strong momentum play in going forward. So recommending long positions in Sun Pharma for a 1,065 target. The stop loss should be placed at 1,010. And on the short side, I think Pyramid Enterprise has been a good low top, low bottom sequence. We have seen a fresh breakdown from a bearish flag formation. The OI addition is again significant, so we are expecting this particular momentum to stretch towards 775. So stop loss should be placed at around 825, and fresh shorts can still be considered in PEL.
All right, Sachi, thanks a lot for joining in and giving us all those calls. With that, let's talk about the sector which is buzzing today. It is the FMCG pack. Look at Britannia up around 3.5%. HUL at the high point. We have Tata Consumer as well, which is doing well. Marico, of course, is the one which is leading that pack after their third quarter update. You know, Nigel, I was just going through Marico's commentary and a couple of things really stand out in terms of green shoots for the sector. The first one, in the third quarter, they said that the entire sector witnessed some improvement in demand. The urban and premium categories maintained their steady pace of growth, so no problems out there. Recovery in rural demand wasn't as discernible as they expected in the third quarter, and that is something that a lot of people have been saying. So what's Marico saying, which is different, is that there was visible recovery in December as consumer pricing stabilized. The reason why there was rural recovery which was impacted was because of high inflation. Now with prices stabilizing, you know, there has been some recovery. What are the triggers for rural recovery going forward? We have easing of commodity inflation, then higher crop realizations, ongoing government interventions coming, and everyone will be watching out for what the government does with regards to a likely stimulus in the union budget. So with all these triggers in place, can rural weakness bottom out from here or not? If December is something to go by, maybe things are looking up, and which is why we're seeing an uptick in all the FMCG stocks. Of course, the ones which are more urban-centric are doing well because the pace of demand in urban and premium categories are still steady.
Well, that'll be a good news, Manglam, not just for the sector, but for the country as well, and because the bottom of the pyramid has been struggling. So let's hope that it's close to a basing out, and maybe some signs are indicating that as well. That's the hope as of now. Well, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Khushbu Gupta Rai of moneycontrol.com joins us to talk about a stock that she's tracking closely. Khushbu.
Sundaram Finance is an established player in the medium and heavy commercial vehicle market and has business interests spanning across home finance, asset management and non-life insurance segments. It has a strong foothold in southern states and commands strong pricing power on account of its prominent presence in the core commercial vehicle market. Sundaram's asset quality is best among peers, and the company is poised to grow on the back of the current upcycle in its core segment. On the earnings front, the company reported solid quarterly and first half results with broad-based growth seen across asset class and geographies. Going forward, we believe that the company's expanding presence to capitalize on the higher capacity utilization and improved cash flow of end consumers will aid asset growth. We expect the company to grow the lending book in a very calibrated manner, improving the return on equity. Additionally, other financial services business such as asset management and general insurance are expected to grow in sync with India's economic growth. In addition to the structural tailwinds, Sundaram's superior asset quality and healthy return ratios makes it a worthy bet, and we see reasonable upside in the stock at the current market price.
All right, thanks a lot for that, Khushbu. With that, we slip into a short break. On the other side, we have the management of JTL Industries joining in to discuss the outlook for the business. They've given their third quarter update. Welcome back. The stock on our radar is section pipes and tubes manufacturer JTL Industries. It's recorded its highest ever quarterly sales volume in the third quarter, and capacity expansion in its Punjab plant also is partly on stream. We do have Pranav Singla with us. He's the executive director at the company. Thanks a lot, Pranav, for joining in. A couple of weeks ago, we did have Dhruv join us, and he said to us that, you know, by the end of this year, you all will do about 2.75 lakh tons of volumes. I look at your numbers. The first 9 months, you've done about 1.2 lakh. Just wanted to understand, are you taking into account the consolidated entity as well when you say 2.75 lakh tons for the entire year? And if yes, what does the comparable number for the first 9 months stand at?
Thanks for having me on the show, Nigel. So we did a quantity of 1,20,000 tons in the 9 months. And we just commissioned a capacity of 50,000 tons in the Punjab plant. We also said to commission another 50,000 tons of capacity in a Punjab plant by the next month. And by merging the Raipur entity, we have a good capacity, and we aim to end the year at the target we gave before at 2,75,000 tons. So we're still on track to that.
Just to break this up, Pranav, you have done 1.2 lakh odd. You have one capacity that's come on stream at your Punjab unit. You're seeing the other bit as well gets commissioned. So to reach that 275, how much are you assuming from the current entity? How much are you assuming from the merged entity to take us to that number from 120? How do you reach there?
So from the current scenario, in the current entity, we'll be doing around 90,000 tons of material in the following fourth quarter.
Okay.
And around 50,000 tons to 60,000 tons of volume would be coming from Chet Industries. So altogether, we'll be close to 3 lakh tons of volume this year.
Oh, 275 or 3?
Close to 3 lakh only. It will be more than 275.
More than 275. All right.
So we just finished the plant a month before that we were aimed to. And now we aim to commission the next plant in the next month as well.
Got it. Pranav, we got that. We've got that. 275 at least is what you're looking at. Could you tell us how much was value-added sales as a percentage of your total mix for the past quarter? I ask you that is because that gives a bit of a fillip to the EBITDA per ton as well. And also your exports. You all were talking about exports going up. It's still only 10%. Do you think that in FY24 it moves up from this 10% contribution?
So we're working on the exact calculations on the valued product this quarter. But from the estimate, it's around 1/3, 35% sales, around 16,000 tons of material was given in the value-added sector. And if you talk about exports, exports have risen from last year. From last year, we had to jump up 48% year on year. And over the quarter, it was a 10% increase. So we anticipate the similar kind of increase in the volumes and the export happening further as well. And we aim to take our exports to 15 to 20% by this year end as well.
All right, Pranav, just hang in there for a moment because we are getting updates coming in from Godrej Consumer as well. This is for their third quarter business, and this looks pretty good, to be very honest, because they have seen double-digit sales growth backed by low single-digit volume growth. Back earlier in the last few quarters, the sales growth was largely on account of the price hikes that the company had taken, and the volumes were declining. In the second quarter itself, the volumes declined by about 5% odd. So low single-digit volume growth is something that the street will like. There has been a sequential improvement from high single-digit sales that we saw in the previous quarter as well. Importantly, for India business, it is led by double-digit sales growth in both home care and personal care. Indonesia has begun to see gradual recovery. Africa continues its momentum, and the company says that they should see gross margin recovery and high single-digit EBITDA growth as well. So some of their problems are now ameliorating. They are seeing some improvement. Volume growth in India is back. The decline in Indonesia is, coming off, and the quality of profits should see meaningful recovery with gross margin improvement, and some of that after, investing into marketing, they should see high single-digit EBITDA growth. So there might be some margin compression year on year, but the quality of profits, as the company has said, should improve. The stock up around 2%.
Okay, all right, got that in terms of that update. Pranav, thanks for waiting by. Apologies, we had to address some news that did come in there. So 15 to 20% is what you're looking at exports to go to. And in the past quarter, value added was close to around 35%, a rough estimate out there. What does this mean in terms of the EBITDA per ton? Last quarter was bumped up because higher contribution from value-added sales. So for the second half of this year, what should the EBITDA per ton be? And for FY24, give us a guidance on both volumes as well as, your EBITDA per ton.
So we anticipate a lot of demand in the value-added sector future as well, because there's a lot of missions, government missions started by the Honorable Prime Minister, like Jal Jeevan Mission. And there's a lot of push from infra side as well for the value-added product. So we aim that a value-added product would be somewhere around 45 to 50% in the coming months as well. Although we had a slightly dip this quarter in the value-added section, but we anticipate doing the recovery in the following quarter and making back the total product mix of the year end around 50%. And if you talk about the FY25 volumes, we are thinking of achieving 350,000 tons of volume.
Okay.
And that'll be consolidated volumes of Chet Industries as well.
No, this 350 is for which year? For the coming year. That's FY24, right?
Yeah, 350 to 370,000.
That's for FY24. That's the coming year.
24.
350
yes.
to 375. And EBITDA per ton, what are you looking at on an average for the full year?
Similar margins what we have right now, around 5,500 to 5,000 to 5,500 rupees.
All right, 5,000 to 5,500 rupees. Just from a business standpoint, APL Apollo Tubes has been doing well over the last few trading sessions. We've seen that stock do well. And I mean, in the past as well, we have seen the kind of work that they do. How is it that your business is different from theirs? I mean, just wanted to understand, is there any competitive overlaps there, or is it different?
Yeah, I'm also wondering how come you all are doing your profitability? That's a far larger player, right? But your profitability is a little bit higher. What are you doing right?
So basically, we focus more on value-added products. That's the major share in our product mix, and that makes us lead to a higher beta and higher margins as well. And apart from that, we also get solar section industry as well. So we make solar panel structure. That's something APL doesn't do. So we cater that market, and we receive higher margins in that side as well.
In the third quarter, how much was value added, and how much of it was solar industries? I mean, if you could give us a sense of how it differentiates in terms of EBITDA per ton, realizations, etc.
Out of 35%, the total value added, around 10% was solar industry.
Oh, okay. And what's the differential in realizations for all these business?
It's kind of the same realization that we receive in both sectors. It's just the percentage of value added increases. It's similar margins.
Pranav, that it's 10% of the 35% or 10% of the total mix? 10% of 35% effective will be around 3.5% of your total sales.
10% of the total mix.
Of the total mix. Okay, all right. Fair. So close to around a third of your value-added sales were because from the solar division itself.
Yes.
Got it. All right. A couple of more questions. How do your SKUs differ from APL Apollo? They are the leaders, so I ask you that. And if you could give us a rough sense about what is your advertising spend, or is there any fixed allocation you have put out there?
So we have around 1,000 SKUs under JTL right now, and we aim to bring DFT technology in the coming months and add bigger dia sizes and higher thickness sizes. And so we can reach SKUs of around 1,500 numbers. But apart from that, it's the similar kind of SKUs we share with APL, and that's going to be in the future as well.
Would you have any sense of the market share that you have in the business right now? How much of it is organized? How much of it is unorganized? What's the market share that you're targeting? What's APL's market share?
So we think that the organized market size is 50% of the total market size. And out of the total 50%, I think we are somewhere around 8 to 9% of the total market size.
Okay. All right. Take that point, Pranav. Thank you so much for joining in and giving us all those details on the business. Wish you a happy 2023 and also a positive FY24 with the kind of guidance that you've given. All right. With that, we'll slip into a short break. Come back, get you more on the markets and individual stocks.
Well, from the broader markets, a couple of stocks have moved to the low point of the day. So you pull up Chola Investments, that stock is suddenly struggling. It's moved to the low point of the day. Keep an eye out on that one. And Jubilant Foodworks as well has suddenly seen a bit of a downtick. So both those two notable losers in this hour itself. But on the flip side, you have these tire stocks. They are bucking the trend. Cooling of crude prices, that's good for them because a lot of their input costs would be crude derivatives. So you have Apollo Tires, you have Balkrishna Industries, both of them flying away. And a couple of other names as well. GSPL, the stock did see a bit of a pullback in the last couple of sessions. Today it's pulled back. It's moved to the high point of the day. So good going on that front as well. But on that note, though, we'll wrap up on this edition of Chartbusters. That's it from Mangalam and myself. You stay tuned, though. Trading Hour comes up next.